Hey, what's going on? Welcome back to the channel. In this video, we're going to be taking a look at Glmr. I do want to say that I'm not a financial advisor. You should do your own research before investing money into crypto. If you haven't seen the previous update, make sure to watch that before watching this one. It's going to be linked in the top right hand corner of the screen. Now let's jump straight into the TA. Taking a look at the daily chart, we're not going to cover all the resistance blocks above us because we have talked about them on several occasions during the previous videos. So right now we're going to focus on this resistance block that we have set between 36.32 cents down to 33.8. So I'm going to set the price tags here just so you can follow the blocks more easily. We're going to remove this price tag for now. So our local bottom was printed here at 21 cents roughly. And this was printed June 15th, June 16th. From there, we started retracing. We already printed a higher low, and it looks like we're set to make another impulsive move to the upside. So this is our current Fibonacci retracement here. And you can see that we are targeting the 1.618 level in case we start losing the low that we just printed in June a few weeks ago. So if we start losing that, we're going to be looking at 17.5 cents as our technical target to the downside. So far, looks pretty good. If we start breaking above this local high, this fib is probably going to get removed from the chart, and we're going to start looking at a potential move to the upside here. And the 1.618 target is going to be at 32 cents or slightly higher than 32 cents. And you can see I do have a potential Elliott wave theory playing out, just a small one on this small little fractal that we could have. So we have a wave 1, wave 2, wave 3, which is usually the biggest wave, wave 4, which should not go below the wave 1 high, and then you have the wave 5, which is either as big as wave 1 or sometimes a bit smaller. So you can see that this would take us approximately to the top of this resistance block. Now this resistance block above us from 36.5 cents down to 34 cents was lost back in May 2023. So once you lose a support level, typically you print a low and then you start retracing back to that resistance and you retest it and you get sent back down for either a higher low or a lower low or a double bottom pattern. That depends on what happens, but that's not important as of right now. So if you are looking at a swing trade, you could potentially secure yourself a nice 40% to the upside here, if you're looking for a swing trade, of course. But if we have a capitulation out of the blue, the price can obviously drop back down to the local low here, which is going to be a 20% pullback, or the 1.618, which is 34%, or if you want to be a bit conservative, you can take a look at the 1.272 at 19.5 cents, which is 25.5% to the downside from our current price, which is slightly above 26 cents. So this is the potential scenario that I'm looking at here. If you are able to get back down to 21 cents, that's where I would be accumulating as much as possible. Even right now, the price is very cheap, so I would try to start building a position below 30 cents. It's not really important if the average price is going to be 29, 28, or 22 cents. As long as it's below 30 cents, that's a really, really good entry, because once you're going to be taking profit during the bull market, you're not going to be thinking about whether you should have bought in at 27 or 26.5 cents. You're just going to be glad that you managed to buy in below 30 cents at all, because a lot of people are going to be buying up here at $4 or $5 when we're going to be starting to take profits. So to set up a Fibonacci retracement with extension levels to the upside, we first need to print our bear market low. So we don't know if this 21 cents area is going to be our bear market low. We don't know that yet because we haven't started retracing above major resistance levels. So I would say we need to break above the August 2022 high for us to safely say that this was our bear market low here at 21 cents. Until then, anything is possible. We could be looking at another drop, another capitulation. We have the FOMC meeting happening pretty soon, and it's looking like we're going to be getting another 2 hikes. So things are not going to be looking very bullish within the next few weeks. At least for altcoins, Bitcoin seems to be holding strong, and I would be eyeballing Ethereum as well, because once Ethereum starts pumping, after that we might see an alt season in August/September. So that pretty much covers the daily chart. Let's jump into the RSI. You can see that we retested the support block between 31.3 and 23.5. We dipped even below it slightly. This was a perfect buying opportunity, and this perfectly aligns with this low that we had here. So once you entered the block there, you could have been averaging in at 22.5 cents, and you're already up 16.7% from that area. So this is a pretty good support block to have on your chart, just in case you want to compare, just in case you need a few more indicators to tell you when a good buying opportunity is presenting itself. So right now the RSI is sitting at 50.5, straight in the middle, and I would be looking at a retracement. So potentially look either at the yellow support trend line here that we have retested multiple times, as you can see. So we have one retest back in May 2022, in June 2022, in September 2022, almost in November. We had another fake out in March 2023, a move below that, a second move below that, and now we're pumping. So maybe we have a move back down to the yellow trend line and we have a bounce from there. That is potentially the move that we're going to be looking at here. But if we continue pumping with this next wave that we're potentially looking at in terms of the Elliott wave theory, then the RSI could come up all the way back up to this local high that we printed on June 22nd, sitting around 63.3. Now, if you're buying in for the long term, I would say great buying opportunities. Don't mind all of these short-term moves. I would say just start accumulating and send your tokens into staking. Now let's switch over to the weekly chart. And before we continue with the video, I quickly want to mention my Patreon that's linked down below in the description. If you enjoy my content, you want to get more exclusive content, and you want to support me at the same time, definitely feel free to check out the Patreon, because you're going to get a 7-day free access on my Patreon and an instant access to all of my content since October 2021, which is when I started. You'll get access to content like exclusive weekly podcasts, and we're starting to invite guests already. We have 40 plus low cap gem posts. We have a bunch of project reviews. We have a bunch of resources that are going to help you save time and make more money with this upcoming bull market. So this is definitely a great exchange of value for the both of us. And once again, there's a 7-day free trial. Feel free to check it out. You can leave anytime, and let's continue with the video. Taking a look at the weekly chart, we're just going to quickly glance at what we're seeing here. The 1.618 target was perfectly met. You can see this was 22 cents, and how we set this up is basically we took this local high that we printed back in February 2023, and we have our local low in January 2023. The 1.618 target was sitting here at 22 cents, and we have retested that perfectly, and we're already starting to move to the upside. Where I would be looking to face some resistance is obviously this block here between 32.5 and 31.5 cents, because that has been our support in 2022 in November and December. Then obviously we lost it here in May. And also I would be looking at this descending teal trend line that we've been retesting as resistance since August 2022. We had the second retest in February this year, and we could be looking at a third retest in July or August, and then a move back down. So beware of this trend line if you're looking to swing trade, or you're just looking to enter and exit real quick. That trend line could provide you with a 36.5% trade. So that is what I'm looking at on the weekly chart. You can also target the 20 EMA if you want to be a bit more safe with your exit. But if you're looking at long-term buys, once again, very, very good, very juicy prices in terms of long-term hodling. The RSI is extremely low, so I would not be looking at selling anytime soon. I'm simply accumulating as many tokens as I can, and I'm sending them to staking. And the stochastic has started recovering from the oversold, and now we have printed a bearish cross, so we could be looking at a similar situation, kind of like what we saw over here. If I change the color to yellow, you can see we had a move above the index of 20 here, which meant we got out of the oversold zone and then we quickly crashed back down. The same could be happening over here, where we have a quick little retracement to the upside like we just did, and then we're going to end up coming back down. So maybe we could see an exact same scenario play out here. If that is the case, then we're going to be looking at 22 cents retested fairly soon. That is pretty much it for this video, guys. Let me know if I missed out anything important on the charts. Feel free to follow me on Patreon and Telegram and Twitter. All the links are down below in the description. I'm going to see you in the next one. Take care and stay safe.